interesting color bars. And the color yesterday was red. What really led to this selling? Any idea why suddenly we had this deep big sell number on the FI sell front?
Hi, good morning. Yes, obviously we saw a good run of sell-off after 5-6 days of pause in the markets. I think two, three things which we could make it as one is obviously before any of the Fed meetings decisions, I think we see some kind of unwinding happening and maybe a sell-off happening before that. That's a normal phenomenon which we see. And yesterday, if we see, it was a little bit more. Secondly, I think towards coming to the closure of an FNO expiry next week, and we have a truncated week. So week before that, and also coming towards the end of that FNO. So maybe there's two reasons what we thought about it, where the market slipped out more yesterday. And yesterday, importantly, if we see that the selling was more in fears into a large cap heavyweights, like if you like of say banking, which was holding on for quite some time, which was a performer in this rally, and we saw HDFC Bank giving up the gains yesterday and followed by other banks as well. So I think this is the move. What we thought about it, that the sell-off in the markets.
Rahul, there seems to be a powerful comeback in this entire solar stroke clean energy stroke clean energy EPC theme. What is your house view on that? What is looking good? What is looking interesting?
So I think one important thing to note in this entire pack is that I think the energy as a sector globally has been doing well. And obviously in India as a power shortage country, and we'll see this kind of a renewable energies trend setting up since last year and a half, 2 years. If we see, the most of the stocks have done well. So what we feel, a lot of stocks have run up quite sharply, and fewer concept where I think we need to have a hold it for next 3-4 years as a theme, then one should buy at this level because the valuations are very expensive in most of the stocks. So I think to play indirectly or directly, whatever you say, but I think in the listed where the comfort is more in terms of valuation is like Tata Power is what we've been liking, and we've been adding in our portfolios for our clients to play this space.
Rahul, regarding Ola, that's of course a news on account of that 10-minute food delivery that they've tried to kickstart again, Dash, because they had come out with it a few years ago and they had to, kind of stop it. Now they're starting a pilot in Bengaluru to begin with. What do you make of this space? I mean, of course, all that dark stores and all that 10-minute delivery was as it is getting competitive. Now food delivery is also getting heated up.
So I think, as you rightly mentioned, I think one is obviously this likes of Zomato and Swiggy, which is the flavor of the markets, and most of the platform stocks. If we look at it, I think they have been doing quite well in last few months, and especially in last 2 months they have been run up quite. And when now just comparing again with Ola, which is talking about that in terms of food delivering as well. So I think yes, I think you will see some kind of momentum again picking up from an Ola as well. But just still need to understand what the management's guidance is in terms of the entire thing and how they are focused on and building up this business and what kind of the revenues what they're expecting, which is more important to understand in Ola Electric and understanding this entire food delivery thing.
Okay, so that's the take coming in on Ola, but let me now take it. See a major downtick on the stock of VATech Wabag because one of the large orders from Saudi Arabia has got cancelled. Rahul, is this a stock that you track closely, and would you have a view on this?
Sorry, which stock?
VATech Wabag.
Sorry, I couldn't hear it.
The stock is VATech Wabag, which is into desalination, water cleaning and all of that. Rahul, if you track that one?
No, I have not been tracking as of this thing, so I will not be able to comment on that.
Okay, but nonetheless, the stock is going to be...
Emergence of quick commerce as a theme, and Zomato has hit out of park because of that. Swiggy has promised to really march on as long as this quick commerce theme is at play. So Rahul, given that now Ola is moving into quick commerce, Amazon is moving into quick commerce, Flipkart has moved into quick commerce, do you think this entire quick commerce theme is slightly overheated and one should be careful if you're buying these poster boys, Swiggy and Zomato now? Rahul?
So I don't think so that this entire commerce space, I think especially if you look at it, obviously the speed has been fast for both of Swiggy and Zomato in last 2 months. Obviously on the back of Swiggy's listing, we saw some kind of momentum and robust this thing. And obviously So what I feel is I think way the management's prediction is about that companies growing top line growing at 65% plus, revenue growing 100% plus, and I think the guidance for the next 2 years have been pretty strong. So markets always is ahead of all these times. So my sense, I don't think so. Zomato still makes a convincing view. From your post is that 8,500 QIP what they did a few days back. I think still I think, and way they have been talking about that Blinkit store presence and way the things going to be for them in that. So my sense, I think Zomato still remains the entire best play in this entire play, and I feel that another 20-25% is easily to be made on this stock.
In this rally, defense and railway stocks.
I wanted to get in your sense on the entire cement basket because what a year it's been. 10 deals have been announced in the year. We've seen the highest number of pacts, including acquisitions, fresh financial investments as well. And the combined value of investments is over $3.5 billion. What's your outlook on consolidation within the cement space and all of these major deals?
So I think if we've been seeing that cement as a whole, we remain to be bullish on as a sector, as a firm, and I think after the Q2 was a little bit softer, and what the cement companies have given a strong commentary on this Q3 could be in Q4, and historically also Q3, Q4 numbers are usually good for the cement companies. And coming back to it, I think yes, the acquisitions and mergers happening in this entire space. I think what industry sees, I think the setting up a new and expansion takes a longer, and where the value is there to make it a more conglomerate and acquisition where there have been a synergy to make more money on that. So I think that has happened in most of the number names which has happened this year and which might continue in future in case if it is there in this sector.
Okay, so cement as a pack is something that Street is now eyeing out for. The other one, of course, has been the real estate pack, and that's something that we were discussing with the technical experts as well, Rahul. Oberoi Realty over the last couple of days has managed to do very well. Today, the news flow on AB real estate is quite strong. There's a note on DLF which is coming from CLSA as well. Which of the stocks from the real estate pack would you most recommend right now?
So I think all large plays. I think what markets have sensed in the last 2 years. I think the robust sales what most of the real estate companies have given and their guidance and I think whatever guidance they have given, I think they've achieved it. And what is this things what we look at is I think one is obviously the markets is luxury markets which is showing a quite good momentum and which is there in most of the quarters there has been a good number of sales. So my sense I think. Large cap names, obviously DLF remains the top bet, followed by obviously Oberoi in that space because I think they are very good in terms of the luxury markets. And thirdly, I think what we've been liking is Lodha. I think where we see the kind of risk versus reward is quite favorable. So I think these are the three stocks what we like in real estate as a whole.
Well, as to how you've read into IT, do you believe that yes, there might have been a bit of a slowdown when it comes to the quarterly numbers, but it is looking promising in terms of the deal wins, in terms of the adoption of technology, revenue guidance for the IT basket? What are you penciling in for the year ahead?
So I think obviously post Q2 numbers, we've seen the most of the IT packs have done quite well. And I think large caps or mid caps have obviously outperformed the large caps. And I think Q3 numbers is a thing to keep a watch on it. I think and usually historically if we see Q3 are usually softer numbers, but I think markets have already discounted that and it's going on. And if we see, so my sense large cap IT stocks still have a lot of room and comfort vis-a-vis the mid caps. So in names and order preference, what we've been liking is HCL Tech, Infosys is our top bets in that space, and I think they will continue to deliver strong numbers in the next couple of quarters.
Or a buy with respect to risk reward, then I think the classical stock over here is to go for L&T.
Okay, L&T is a classical stock to go to, but it looks like Rahul Asian Paints is no longer the classical blue chip that everybody used to like. because now the competition is actually having an impact. Yesterday it was Investec talking about how Birla Opus is getting good response from customers, and today Nuvama has written on the entire paint sector, and they are talking about how Berger and Indigo paints are likely to outpace Asian paints by a huge margin.
So I think if you look at the entire FMCG sector as a whole, has been a laggards in this post the Q2 earnings, and then I think the numbers reflects the prices, right? And I think this sector was obviously in terms of valuations was expensive, and if the numbers were muted numbers with a 1-2% growth, I don't think that the PE of this kind of can command. So I think that is what it is, and as you rightly mentioned, that the competition is fierce more and could be a more value in those play rather than the higher value stocks. So I think, but again, there would be a value at some point of time in Asian Paints as well. That stock might underperform, but it might stop falling from this level. So I feel that Asian Paint might underperform, but other stocks like Grasim and all to play that Birla Opus would be a better bet vis-a-vis in that same sector.
Let's stay on with us, and in fact, let's now I let you go a quick word as far as the auto sector is concerned, because globally that Honda and Nissan merger is being talked about. I'm not sure if back home that is going to have any implication on the companies. Any initial thoughts there? And the Vahan data is out, and it seems like TVS has managed to gain share versus Hero and Bajaj.
So my sense, I think if we look at the entire two-wheelers and for passenger vehicle as a space, I think we had a good year in terms of performance and muted numbers in Q2. I think we saw some kind of sell-off in this entire space. And obviously what we like is, I think in entire spaces, I think Mahindra and Mahindra, I think two things. Obviously the rural has been better than the urban. Second, I think tractors numbers have been much better. And obviously the launch of their cars have been, the response has been much stronger. So I feel that M&M still can deliver 20% more from here onwards, and we might see something of muted, in terms of the two-wheelers names. So I think the better bets in the entire auto would be M&M from here.
Okay, M&M is something that you like. On that note, Rahul, we let you go. Thanks so much for making time and speaking with us. But since we are on the subject of auto, let me take it across to the conversation.
If you like this video, then like, share and subscribe to ET Now.